G'day everyone, Happy New Year. Hope you had a great festive season. We definitely did in the Hanna household. The kids really loved the whole period and the whole festivities of Christmas, which was really exciting for us, and I hope it was for you and your families as well. Attached is your December 2019 quarterly report. Really great to see that markets, not only in Australia but around the world, finished off the year with a really positive note, so that the rolling 12-month figures are really quite good, which is fantastic to see. When you're looking at your performance relative to the markets and those sorts of things, it's really important just to revisit what we're talking about when we're trying to put together portfolios. So depending on your risk profile, whether you're moderately defensive, balanced or growth investor, depends on where you fit in the scale between exposure to growth assets. And I guess what we're underlying trying to do is achieve the majority of the upside in good markets and then protect on the downside. And I guess we're really pleased to show that this quarter, even with that sort of mentality, we were able to get the majority of the upside in this pretty good rolling 12-month period, which is really fantastic, and it just shows that the investment philosophies that we're using here at JBS are working, which is really great. When you're looking at the quarterly report this time, you'll notice that there has been a couple of slight tweaks. So we're continuing to try and improve our reporting to our clients. So you'll see there's a couple of new graphs and a couple of new tables in there. So hopefully they add some value to you and are clear. But if you do have any questions around what they are showing, what they're illustrating, feel free to get on the phone, because it is important that you are able to understand how things are going and how you're tracking towards your goals. Looking forward to 2020, we've clearly got a few larger political things to play out with the US election coming forth, and you can see already at the start of this year developments happening between the China and US negotiations, and that's something that we've sort of been expecting in recent times as Trump essentially comes into a political year, and the last thing that he wanted to do was ultimately go into that election period potentially with a recession pending. So clearly the negotiations have been playing out really positively, and that's been then flowing through into markets and the expectation of where the economy is going to be going. Brexit's obviously getting a bit clearer about where they're going there, and I guess that most analysts are expecting that that's not going to be a really bad exit. It's going to be, the lesser of two evils, I guess, and a bit of a smoother exit there. So that's obviously adding some confidence. And generally, most economists around the world are seeing a lot more positive numbers coming out of Europe and even Japan. So that we're seeing some good economic data, which is giving confidence and stimulus and those sorts of things. Clearly, locally, we're still seeing, the effects of interest rate cuts and also the tax cuts and stimulus that came out in 2019 flowing through. And I guess that it's interesting to see that a lot of economists who are potentially talking about a slowdown towards the end of 2020 are actually wondering if that potentially is going to push out another 12 months or so. So really positive signs for investing over the next sort of 12 months or so. Having said all that, it is really important to understand exactly where you are in your investment cycle and what you're trying to achieve. So clearly, while this sort of volatility, I guess, potentially continues over the next period of time, there's going to be some opportunities to buy, but we want to make sure we're doing selective buying. So looking at sectors that have got longer term opportunity but yet potentially are undervalued at the moment. So that's what we're doing, and from that point of view, it's really important to make sure that we stick to our process in relation to defensive assets. Cash is clearly, the interest rates being so low, is really only sort of holding steady if at best. So we just got to be careful that our clients and our portfolios in particular don't get tempted, I guess, into doing something that's outside of their risk profile. So that's just something to really keep in mind when you're having a look at your performance, your asset allocation and how things are going. So yeah, really positive rolling 12 months. Great to see some really good numbers going forward. I think the outlook for 2020 is going to be quite a good one, but we're obviously going to keep an eye on the volatility as it comes along. So enjoy the quarterly report, and if you've got any questions, give us a yell. Cheers.